Good morning and welcome to the Killik and Co market update. We're now in quarterly reporting season and it's going to be a busy few weeks with lots of different company results coming out. The biggest surprise so far has been Netflix, which announced that it had lost 200,000 subscribers in the first quarter of this year and that it expects to lose a further 2 million subscribers next quarter. Netflix has been raising its prices around the world, which has likely had some impact, and it's also been suffering from increased competition from the likes of Amazon Prime and Disney+. However, the most likely cause of this is that many of us signed up to lots of different streaming services during lockdown, and now that inflation is on the rise, we're trying to cut back on spending, and that includes getting rid of excess streaming services. Investors had become used to Netflix adding millions of subscribers per quarter, as you can see by this chart here. So the loss of subscribers for this quarter and the predicted larger loss for next quarter came as quite a shock, and the shares fell by over 37% when these results were published. Between 2017 and 2021, the shares gained over 400%, but they've lost over 60% of their value so far this year. That said, it does appear that Netflix is still the most popular of the streaming services. Here we have a chart showing the breakdown of US TV viewing. And it shows that of this, 28.6% takes place via different streaming services, and of these, Netflix is currently the most popular one, coming in ahead of YouTube, Amazon Prime, and Disney+. There was also a recent study by Kantar in the UK that suggested that Netflix would be the streaming services that UK residents would be least likely to cut. However, it's definitely true that this weakness in the Netflix share price has fed across to the rest of the tech sector this week, and in particular it does feel as though investors are quite nervous about other streaming services such as Spotify, so it is likely to be quite a rocky results season as investors wait to see how other companies have fared over the last quarter. Consumer staple stocks have been outperforming consumer discretionary stocks over the past quarter. Consumer staples are things that we have to buy, such as food and toothpaste, whereas consumer discretionary items are those that we're more likely to cut back on when the cost of living rises. On this chart here, we're comparing the consumer staples elements of the S&P 500 index in the green to the consumer discretionary elements of the index in the pink. You can see that the discretionary stocks had a good year last year when the economy was recovering well from COVID. However, they've dropped quite heavily this year as the cost of living has risen. The consumer staples, on the other hand, have been much more stable and they've had a very good quarter. Consumer staples can be seen as being a little bit boring, but by including them in your portfolio, you're likely to reduce the overall level of volatility. Here we've got some examples of the biggest consumer staples and discretionary stocks. For the staples, we've got Procter & Gamble, Costco and Coca-Cola, and in the discretionary category, we've got Amazon, Tesla and McDonald's. So do give us a call if you'd like to discuss the overall balance of your portfolio. UK retail sales were published this week and the figures came in worse than expected, which is further evidence that people are reining in their spending. Here's a chart showing how UK retail sales have changed since 2019, and you can see the negative impact of the various different lockdowns. Clearly these have been on a negative trend over the last few months, but we're still just ahead of February 2020 levels, so we'll just have to wait and see where the sales go from here. Moving on to have a look at next week, you can see it's very busy on the calendar. There are far too many companies to list individually, but we are looking ahead to the results from Spotify, given the negative results we've seen from Netflix, and we're also looking ahead to results from some of the big tech companies such as Microsoft and Alphabet. That's it from us. Enjoy the weekend, and we'll see you next Friday.